Should we start, Divakar, now?
Yeah, we'll do that. Good evening, good morning, ladies and gentlemen. I welcome you to Niyogin's Niyogin Fintech Limited earnings call for Q1 FY22 results. To discuss this quarter's business performance and future outlook, we have Tashwinder Singh, the CEO, and Rumit Dugar, the CFO. Before we proceed with the call, a disclaimer: during the interaction in our materials, we may make certain forward-looking statements. They must be viewed in conjunction with the risks the company faces, and these may not be updated from time to time. More details are provided at the end of the investor material and other filings that can be found on our website at www.niyogin.com. With that, I would like to hand over the call to Tashwinder to take us through our company's vision and strategies. Over to you, Tash.
Thank you, Divakar. Good evening, everyone. Thank you for taking the time to listen to our story. I welcome you to Niyogin Fintech's earnings call for Q1 FY22. I do hope your families and you are safe and healthy at home. I think before we get into talking about the performance and the good and bad of the quarter, I'd like to give you a little brief about our company. Niyogin Fintech operates on a tech-centric platform-based model where we serve India's underserved SMEs through our rural platform and our urban platform. Our rural tech proposition is focused on providing the platform infrastructure for our partners, who then use it to onboard small retailers or SMEs in rural India to provide banking, payment, and financial services to their local communities, basically promoting financial inclusion. On the other hand, our urban tech platform provides the platform to financial intermediaries to help serve SMEs in urban India on two fronts, largely providing access to short-term credit products, and the other is through our wealth management services through, again, our money front platform. Our business model, therefore, consists of a specific partnership-driven phygital model that includes financial intermediaries in urban India and BC partners in rural India to provide cost-effective market access. This helps us increase our market access multifold and take advantage of these local partnerships and also save on our customer acquisition costs. We can then incrementally add products for the end customer on our platform while providing income augmentation to all our partners. The revenue model is quite straightforward. The revenue model is transaction-based, and we make money as the end customers transact using the platform. Now, getting into the quarter that's gone by, I think a series of events took place. The second wave hit the economy, lockdowns reappeared, and everyone was stuck at their homes yet again, especially when we were, as a nation, were just proceeding towards recovery. The second wave impacted rural India along with urban India as well, and therefore impacted our transaction volumes, especially when I talk about the domestic remittance business. However, there was no better time than the second wave to test the resilience of our new platform-centric model. Our new model has picked up momentum after completing 2 full quarters since our revamp in December last year. Therefore, despite COVID-related headwinds, our revenues grew by 20% sequentially quarter on quarter, mainly due to the increased adoption of our platform and increase in the average transaction size under our rural tech business. This has served as a validation of our business model and on the capabilities of our platform. Now, being a fintech company, technology lies at the heart of our business. Hence, on the platform capability front, we have been investing in our tech stack so that our services can be consumed as full stack application, APIs, or SDKs. This allows us to onboard all varieties of partners as we continue to broaden the product stack. On the rural tech side, we had a major partner win, and with this relationship is massively scalable across all products. Our partners now collectively cover more than 90% of rural India, and we believe as the adoption of our platform grows, the GTV increase will be multifold. Furthermore, with the focus to increase our transaction volumes, we have been scaling the product propositions we launched last quarter. We had Aadhaar Pay, our digital-to-digital payment platform, and the low-duration transaction-led credit, which is meant for our platform retailers who have a volume and transaction history with us. The transaction-led credit mitigates our credit risk and helps retailers remove their capital constraints so they can do more transactions and drive our non-credit volumes. We have further expanded our product offerings with an upgraded DMT, which is domestic money transfer product, and the BBPS agent institution. On the urban tech front, I am pleased to inform you that our credit book, which is largely a legacy credit book, is now down by a considerable 71% year on year as we exit the generalized credit segment and de-risk our balance sheet. As mentioned earlier, we have repositioned our credit franchise to transaction-led credit. Our wealth platform offers a bespoke experience for MSMEs, large corporates, as well as individuals. All three segments have seen rapid adoption given our AUM increase over 120% year on year and stood at more than 1,500 crores as of Q1 FY22. So to summarize and to reiterate, our key priorities for this year will continue to remain on three fronts. We will continue to focus on increasing our partner base and therefore our market access in both urban and rural India. We will be focusing on increasing the adoption of our platforms and enhancing our product stack. And lastly, we will continue building our talent pool. With this in mind, we will continue to work towards our vision of building a fully digital neobank platform infrastructure to power MSMEs. With this, I would like to hand over the conversation to our CFO, Rumit, who can take you through the numbers, and post which we can take questions. Thank you. Rumit, over to you.
Thanks, Tash. Good evening, everyone. Moving on with the highlights for the quarter ended Q1 FY22. Our platform metrics have been performing well. On the urban front, our partners increased by 59% year on year and stood at 4,333. The retail channel activation rate for the quarter was 15.2, as against 13.9 in Q1 FY21. Our Wealth Tech platform recorded a 120% growth year on year and stood at 15 billion rupees. The Rural Tech platform gross transaction value stood at 11.8 billion in the current quarter, a decline of 5% sequentially. This impact was mainly due to the one-time direct benefit transfers from the government that happened in the Q1 of FY21. And as Tash has already mentioned, the impact on the domestic remittance volumes in the April-May of this year. Our average transaction size in the Rural Tech business grew by 57% YOY and stood at 2,941 rupees in Q1 FY22. Moving on to financials, consolidated revenue for the current quarter stood at 220.6 million against 79.8 million in the corresponding quarter last year, a jump of 176.5% YOY. Adjusted EBITDA, excluding the ESOP charge, which is non-cash in nature, for the current quarter was at 13.3 million against 14.1 million in Q1 FY21. ESOP charge for the current quarter was 17.2 million versus 15.2 million in the corresponding quarter last year. The non-GAAP PBT stood at negative 0.3 million in Q1 FY22 against a positive non-GAAP PBT of 3 million in the corresponding quarter last year. In our credit business, our loan book for the current quarter was 348.1 million against 1.2 billion in the corresponding quarter last year, down 71.4% in line with our articulated strategy. We continue to remain zero debt and a net cash company. There have been recent guidelines which place a limit on the number of statutory audits by an audit firm in a year. This RBI regulation is impacting the entire industry and is not really specific for us. Considering the compliance of the aforesaid RBI circular, the incumbent statutory auditor of the company, MSK and Associates, are ineligible to continue as a stat auditor for the company since they have reached the maximum limits for the number of audits to be undertaken in the current year. Thus, our board of directors have approved the appointment of Piyush Gupta and Company as the new auditors. With this, we can open the floor for questions. Thank you.
Thanks, Tash and Rumit. I would now request any investors to kind of put their hand up. Once you put your hand up, we'll kind of open up your line and you can then go and ask questions. There's a raise hand button at the bottom of the screen. Please put up your hand and then and when you're kind of asking a question, just state your name as well as the institution that you represent. It kind of helps us with the transcription. The first question comes from the line of Sudeep Thakur. Sudeep, I've unmuted you. You can unmute yourself and go ahead, please.
Thank you, guys. This is great. I went through the presentation and I've sort of absorbed the highlights. I know it's still very early days, and obviously the top line growth numbers and the scaling is very impressive. Do we have any? Can you give a little detail on sort of user engagement? How much time they're spending on your platform? How many transactions are being driven off your platform at this stage? And what the churn might be for users? So are there any engagement stats as of yet, or is it too early to start tracking that?
So I think, Sudeep, thanks for the question. I think we can give you some stats. Rumit can talk about that, but I do want to talk about, you mentioned about client engagement and how that's working. I do want to give you one or two use cases that we are now deploying in the market to give you an idea about what we really do. I think the use cases will help explain the model very clearly, right? I mentioned we used we launched Aadhaar Pay last quarter. How is that really scaling up? Let me give that example, and then we can get into specific numbers as you asked for, right? So we have an example. We're working with Bajaj Finance, where Bajaj Finance has 72,000 agents on the ground that are out there using a handheld device to collect EMIs on the loan payments, right? We have now powered all of those devices with our Aadhaar Pay solution, where as the agent goes to the customer can use that device to just debit their bank account and make their EMI payment, as against providing cash to the agent who's coming on their door, right? Now, Bajaj has almost 72,000 agents across the country who are out there, each one holding a handheld device. Part of that Aadhaar Pay solution on those devices is being powered by our platform. So that gives you an idea about the scale and about the engagement that we are doing, right? In terms of actual touch points, Rumit, I don't know if you have the data with you, if you can share number of transactions, etc., to answer Sudeep's question.
Yeah, Sudeep. So in terms of the number of transactions, I think we give you the GTV numbers, but really in terms of the scale of operations, if you look at the average ticket size, it's only about 2,900 odd rupees, right? So last year we touched about 20 million rural customers who came and transacted through our retail touch points, right? So that's the kind of touch point engagement and scale that we are talking about. Last year the average transaction sizes were lower, but we are in that vicinity of 20 to 25 million users or transaction really going through in terms of volumes per year.
That's great. Thank you, guys.
Anyone else who has a question may raise your hand, please. Repeating again, anyone else who has a question, you can please raise your hand. The next question comes from the line of Gautam Trivedi from Napier Capital. Gautam, I've unmuted you. Please go ahead.
Hi, Dash. Hi, Rumit. And I think I understand the fact that this has been a tough quarter. And this quarter too, yes, it's been on the road to recovery, but again, we've had some challenges as well in this quarter. And assuming there is no third wave, how fast can you scale up the rural payment, which is the Aadhaar-based payment mechanisms? I think of all of the businesses that you have, that I personally find that one the most attractive. And as a result, I want to know how many cities are you in right now? How many Kirana stores within those cities? Because it seems to be a phenomenal way of sending money seamlessly, not sending it to a bank, which could potentially be miles away from the end person who needs to receive the money.
Hey, Gautam, thanks for the question. Good to see you on the call. I think we'll give you the data. The rural tech business is a significant focus area for us, and I agree with your optimism on that space. We think that there is a white space out there that we are covering, which really excites us. Scale is important to us because it is in some sense a land grab. We want to be there first. And as I mentioned in my presentation, some of the partners we are working with, right, today give us access to almost 90% of rural India. Question is, how fast can we get our platform adopted in each of those locations, right? So that's really the question that we are focusing on, right? In terms of number of retail outlets, Rumit, correct me if I'm wrong, but we are at about 166,000, give or take, number of retail outlets, up from about 130,000 end of last quarter. Rumit, you want to give the exact numbers?
Yeah, it's 166,035.
Yeah. So I think, Gautam, the number of 166,000 is across the country, right? We are in the ballpark of about 25 to 30,000 villages across the country. we think that there is going to be a significant scale that's going to come in because some of the partners that we've now got access to, as I mentioned earlier, really have very, very deep footprint across the country. And I think we are very excited about this partnerships that we've created. Also on the other side, when I look at the example of Bajaj Finance that I gave, that's a different kind of partnership that we are creating. That is not necessarily a retail outlet. That's a person with a handheld device, which is again covering part of the market, right? So there are multiple ways in which we are attacking the market in making sure that our proposition and our platform is deployed in taking advantage of all or providing solutions for payments that are happening from that segment.
Okay. I guess the other question related to this would be, how are you getting the message across? I mean, if my driver wants to use this function and send money to his wife or his parents in the village, how does one do that? How does he even get? I mean, how are you reaching out to these people who are potentially your customers?
This is a good one because classic question was asked by my cook also, saying that how can my wife sitting in a village in Tamil Nadu use the whole platform, right? I think I do want to bring a differentiation out here, Gautam. We are actually powering the platform of partners, right? So we are not dealing directly with the retailer. We are dealing with partners who are actually retail aggregators. We're providing the technology, the platform. The partners are using our technology to power their businesses, and they are actually going on the ground and getting retailers onboarded on our platform, and they are the ones who are actually running the business. We don't have feet on street. We don't have a significant army of people on the ground, right? Which is where we're able to manage this entire throughput and volume by keeping our costs fairly under control. And we don't need to increase our footprint on the ground to increase our volumes, right? So that's really the business model that we are operating in, which is really to give us a pretty significant operating leverage.
Yeah. So I guess my question. Yeah. Sorry. Go ahead.
So I was coming to that, right? So depending on where your driver is, which city, for example, Bombay or wherever, right, and where he stays, right, there will be a partner of ours who would have powered retail outlets in those locations, right, which would be then advertising and trying to get people to come in and use their DMT proposition, which would be powered by us. So we are not actively advertising in retail space. We are not doing a front end, big bang advertising that come to our platform. It's the partner who does whatever is required to be done in the micro market to attract clients.
And would just remind me, what are the economics of this business for Niyogin?
So, Rumit, you want to give the range of economics because it varies from partner to partner. But Rumit, you want to take us through the economics?
Sure. So Gautam, hi. In terms of key drivers from a revenue perspective, it starts with device, then the transaction-led income, and then there is a fee income component, right? So these are the key drivers. On the transaction-led income, depending on the product stack, it could vary between 40 bits to 100 bits.
Can you repeat that number, Rumit?
You say how much? 40 bits to 100 bits.
40 bits to 100 bits, Gautam, maybe on the transaction, and these products and services I'm talking about, the AEPS, the Aadhaar Pay, the ATM, and the domestic remittance business. The device prices, depending on the type of device, etc., could range between 2,000 to 3,500 per device, and to get thermal printers, etc. So that's the device economics. In terms of our business model, as Dash said, from a gross margin perspective, our objective is to power the partners, and we really are like an open tech platform infrastructure play. And as a result, most of our cost is variabilized with these partners. So when they bring in the revenue, is when we share the revenues with them. So if you will see, bulk of our cost structure is variabilized with a very small component of the cost structure, which is largely on our technology, people, and the platform.
So Gautam, to answer your question, sorry to interject, Rumit, but your other question was how fast can you scale? Now, the beauty in our model is that scalability is inbuilt. Because once we've got the platform out there, right, once a partner buys into our platform and says, okay, I want this, then he takes it to all the retail outlets that he wants to expand his business into. And then as he transacts incrementally, we make more money. Because as against providing a solution one time and taking some fee one time, we are sitting on a let's call it unlimited pool of income, which will keep coming over the years. As his business goes up, we keep making transaction income as well, right? So that is the beauty of the model, which I really like.
I think what I'd like to do is afterwards, maybe tomorrow, Romit or Tash, I can connect with you guys and at least find out who's the local partner in Mumbai and have both the staff at home, get them connected and let them experience it firsthand. And if they're comfortable technology side, which if they can do it through their phones, I don't know if there's a mechanism if they can do it through their smartphones, but they all have smartphones.
Right.
If that's doable, then I think this is proof of concept for them as well. Not for me so much, but I trust you guys. But for them personally, to remit the money directly to the local Kirana store from where their families can go pick up the money.
Yeah, absolutely. Actually, the proof in the pudding will be when they have to take the money from the Kirana store for their families, right? How do they withdraw money without necessarily going to a bank? That would be the real proof in the pudding, and very happy to sort of get you through an experience on that.
Thank you so much. Thanks.
Thanks, Gautam. The next question comes from the line of Sanjay Kumar. Sanjay, I've unmuted your line. Please go ahead.
Hey guys, I'm a bit new to this business model, so the questions might be a bit basic. You mentioned about the Bajaj Finance use case. So in that case, who wants the customer? So if it's Bajaj Finance, how do we cross-sell, or is it just a transact or a fee income-based model there? That's my first question.
Yeah, in this case, in the Bajaj Finance was just one use case for Aadhaar Pay as I was giving out. The customer is owned by Bajaj Finance, right? This is a loan that they've given to some customer, and we are helping them with their collections effort in making it easy for them to collect payment, and we're trying to eliminate the need for them to collect cash. We're removing cash from the equation, right? And they're able to just get their customers to just, and this is rural India, right? So this is not urban India. Most of these customers we are talking about are in rural India. They don't have laptops at home that they can just do an NEFT. They need somebody to come to their house with a handheld device, and we are able to enable that transaction getting done. Or the other alternative is for them to go and give physical cash as the EMI payment. So the customer is owned by Bajaj. We don't own the customer. This is a solution we've given to them. But the scalability from a revenue standpoint, again, is immense for us, because as they increase their business, we will make some commission on every transaction that gets done. So it's a fee income proposition for us.
Okay, so where does credit come in here in this?
No, the credit is not with us. This is not the example for credit. This is a credit solution that Bajaj has provided to their customers. We are helping only with the collections process. The credit solution that we are talking about are the transaction-led credit solution that we give to the retail outlets that are using our micro ATM devices or the DMT proposition that we're doing.
Okay.
Right.
Got it. So the next question was on the urban stack, which is more on about the MSMEs. See, saying MSMEs is a very wide category or scope. We have 6.3 crore MSMEs. Right. So which segment do we cater to? And if you could explain how our platform is different from, say, a QR code based payment, which is online, or an offline POS machine, point of sale machine. So how are we different from these categories? How are we different from the payment gateways that MSMEs or any new enterprises use these days?
So I'd like to draw the distinction. We are not a payment platform on the urban tech side, in the sense that we are not facilitating a payment. What we are doing is we are providing the full stack financial solution to an MSME. Let me explain. As I mentioned in my opening remarks, on the urban side, we have more than 4,000 financial intermediaries. These are typically chartered accountants who each one of them may be dealing with between 300 to 400 MSMEs. And typically when the MSMEs have any requirement for financial services, let's call it a small loan, could be a housing loan, could be a business loan, could be insurance, could be a non-financial product like a SaaS solution for taxation. We are able to provide all of that on our platform. So what we are doing is we are powering all our solutions on our platform to the financial intermediary, who's then consuming those to be able to provide services to the end customer, who's the MSME. So effectively, our initial customer is the chartered accountant, who is our source for getting market access. Through each CA, we get access to 300 to 400 MSMEs. We are not actively doing a transaction-led business there in terms of the fact that there are payments being routed through our platform on the urban side. That is the urban side of our business, which is very different from the rural tech side, where we are specifically doing what I mentioned earlier in terms of micro ATM, AEPS, and DMT, or powering partners who are actually doing this. So they are two very different businesses.
Okay, I got it now. Thank you. Thanks a lot.
Yeah.
Thank you, Sanjay. Anyone else who wishes to ask a question can please press the raise hand button, please. A reminder, if anyone else has a question, you can please raise your hand and I'll unmute the line. We have the next question from the line of Jayaprakash Toshniwal. Please go ahead, Jayaprakash.
Good afternoon, sir. Thank you. So you explained about the urban business and how do you partner with the chartered accountants and all. But on the rural side, is the business proposition, the service proposition is only cash withdrawal or cash deposit, or is there other payments are you also with? And the second question is, here the competitions would be from the CSCs of the world or the government authorized IT services center. So how do we scale up this part of the business? And how do we manage the competition from them also?
So we don't think of the CSCs of the world as competition. We think of them as customers. As I mentioned earlier, right, to answer your second part of your question. I'm sorry, I couldn't hear the first part of your question. I don't know, Rumit, if you got that. The voice was not clear to me, but I did catch the second part. So I'll answer the second part, and Rumit, if you can answer the first. Like I said, CSC for us is not a competition. It's a customer. It's like a partner who we would power with our technology and infrastructure, who we would then provide the whole micro ATM infrastructure, and they could ride on our rails for providing that solution across their entire retail, what they call the VLEs, right, which is the village outlets, right? So there's no competition there from that point of view, right? I'm sorry, I didn't get your first part. If you could repeat that, or Rumit, if you got it, you could answer that.
I think the first question was around the product stack. So maybe I'll answer that, right? So the products, the way we need to think about the whole value proposition is that we are a platform infrastructure company, and our objective is to be able to expand products horizontally and keep powering the partners who then obviously take these products to the retailers or the customers. So today, from a product stack perspective, we have the cash to digital product, which is the remittance business. The second part of the product is the digital to cash, which could be AEPS, micro ATM. Then we have the BBPS product, which is a bill payment solution. Then we are also a micro insurance space. So the objective here is to be able to expand the product stack horizontally. And over time, as Tash mentioned, that we want to build a new bank platform infrastructure play. So we will slowly start to look at getting liability product, etc., also on the platform. So that's really the mix of the broader product stack.
Okay.
So Jayaprakash, when we get all the products that we have, a partner like a CSC could consume all these products and use them to sell to their eventual customers, right? So therefore, we are not competing with them. I think that's the point I was trying to make.
So just on that continuation part, the CSC has its own fully developed website which they claim to, and where they have a wallet from the bank's sponsored wallet, and they can pay customers insurance payment and everything. So here I'm saying we are also giving that platform to them also and trying to get them as a customer.
Yes, absolutely. We have conversations on with them. We have some solutions that have been presented. So yeah, you'll hear about it in the months to come.
Perfect. Thank you.
Thank you, Jayaprakash. Anyone else who has a question, may please raise your hand. A reminder again, please. Anyone else who has a question, please raise your hand. We have the next question from the line of Abhishek Khanna. Abhishek, I've unmuted you. Go ahead.
Hi. I just had one small question, and again, I'm very sorry because I'm new to all of this. You explained the economics of the transactional business that you're doing. Could you also just explain the economics of the urban business that you're doing? both on the lending side and on the wealth tech side? That would be helpful.
Yeah. So I think on the urban side, the economics vary product to product because again, like I said, most of the products on the urban side are not manufactured by us. The wealth business is, as any other wealth business, we are distributing wealth products, be it mutual funds, be it bonds, etc. So every product has its own, sort of commission arrangement where we get some commission. We also have a direct platform. We have an advisory platform where we are able to provide, solutions to customers. On the loan side, again, we are not consuming these loans on our own balance sheet. We don't deploy our own balance sheet for this. Like I said, our balance sheet is dedicated towards transaction-led credit. So if a customer walks in and wants to take a loan, we are able to help facilitate providing that loan to him. And then again, depending on the kind of loan, the economics could vary from 50 basis points to a couple of 100 basis points, depending on what is the kind of proposition that we are providing and who's fulfilling that proposition.
Sure. So it's all again transactional led only, right? Irrespective of whatever the product is, whether it's urban or rural, wealth or
yeah, the income is transaction led. The income that we make is transaction led. The question is whether we are using our own balance sheet or are we just giving it off to other partners who will use their balance sheet, right? So on the urban side, we don't use our balance sheet because the payment transactions are not being routed through us. They use their own payment solutions. In the rural side, since the payment transactions are being routed through us, we have a differentiated view on the credit and its ability to underwrite because we have wallets of those customers and we have of those retail outlets, and therefore we are able to provide credit to the retail outlets.
How significant is that portion of the business, the rural lending where you are taking the balance sheet risk?
So this is a business we just started a quarter ago. So we are still in experimental mode. We've got a couple of products that we launched this quarter to check out the right solution for rural. The initial experience has been very positive in terms of both adoption and in terms of absolutely minimal loss norms. So the scale for that business will come in the next few quarters.
Sure. Gives me a lot of clarity. Thank you so much.
Thank you.
Thank you, Abhishek. Next question comes from the line of Ankit Gupta. Ankit, please go ahead.
Yeah, hi. Just to get a clarity on the last question, you said that we take balance sheet risk on the rural front. So I couldn't understand it. To the credit we give from our own balance sheet.
Yeah, we have a NBFC and a balance sheet, right? We have an NBFC license in Niyogin,
yeah.
Right? And we have balance sheet. And what I mentioned earlier, right? As we repositioned our business last December, we stopped doing regular loans to regular MSMEs. We stopped that business about a year ago. Our loan book is today dedicated towards helping our customers who want to increase their transaction volume through us. Right. So the SMEs, the small-time retailers in the rural India who are basically being onboarded by our partners, if they need capital for expanding their business, our money is dedicated towards that. Right. And the good part is because each of them have a wallet with us, our ability to collect our EMIs, ability to collect and to underwrite, because we know the transaction volume throughput, we know the income they make through us, we know the income earnings that they have through just the payment platform, it becomes easy for us to underwrite basis that. And therefore, our book is dedicated towards that segment.
And these are generally working capital loans. These will be also for capex or opening of new stores.
So these are not loans given. Some of them, maybe a small portion would be working capital, but most of them are dedicated towards increasing the volume of payment business. So, for example, when customers have to keep a certain amount of wallet with us, or they have to buy devices to get their payment business going, I think these loans are given to fund those, or to fund the infrastructure for them to get into the payment business, right? Into the whole micro ATM, AEPS business. We provide them capital for getting into that business. So this is very directed credit. This is not undirected credit, right? This is directed credit towards very specific uses, which will help eventually increase the throughputs with us. And therefore, we get a double whammy, both in terms of increased revenue from the payment throughputs, and anyway you make money on the interest income, right?
But how do we ensure that money is being used for the right use? That's quite difficult to track, right? In the rural areas, in the remote areas?
Not really, because we have wallets, right? Each of those retailers have to open a wallet with us. And when they do business with us, right, they have to deposit some amount of money in the wallet, right? So wallet is available with us. We know all the transactions that are happening on a daily basis. So when you are in the midst of the transactions, it becomes easier to track. If you are just giving a term loan with no access to their bank account, without having any idea about what is going on with that money, then it becomes difficult to track where that money is going.
And generally, what's the yield which we get on these small time credits?
Again, we've not sort of brought that out, on what the yields are, because again they vary, from product to product. Like I said, we have different products. Some are device financing, some are working capital related. So they vary from product to product.
Okay, but these will be not transaction-led income. This will be an extra source of income, right?
Yes. This is incremental interest income which is coming over and above the transaction-led income that you're coming.
Yeah, but Ankit, just to add, this drives up the transaction. Because, for example, if they are doing a remittance business with us, they need to pre-fund our wallet with that amount, and they can do the remittance business only to that extent. So if I am able to give more capital, or he's running short of capital for his remittance business and he's turning or she's turning customers away, then I fund the wallet so that he can do more remittance business. So effectively, you will see the impact of this also on the volumes or the GTVs of our payments business. So, and that obviously expands the income, and we have the visibility on the cash flow because we control the cash flow. So we have the view on the income because it's an income augmentation product, and we have the view on the cash flow.
Understood. Okay, thanks a lot.
Thank you.
Thank you, Abhishek. The next question comes from the line of Hitesh Rambia. Hitesh, please go ahead. I'll unmute your line. Hitesh, you need to unmute yourself before you speak.
Hello.
Yeah, audible now.
Thank you. First of all, congratulations on great set of numbers. Ashwinder, what I understand is with 90% of the rural market covered and the products that we offer, how big would be the market in terms of value? Thanks.
So firstly, 90% coverage is of our partners. Our partners today, they signed up with us, we signed up with them. Now, I think it's our job is to now scale and get to that entire throughput, right? If you look at the market size, I think you again need to break it up into what is the AEPS market size, what is the DMT market size. We have some numbers which Rumit can give you, which will give you a sense, and the scale at which these numbers are growing. It's pretty staggering. Rumit, you want to share some market size data?
Yeah, sure. So in terms of market size, Hitesh, I think you have to look at it from a product perspective. So if I just look at the AEPS product, the transaction market today is run rating at about $36 billion on an annual basis. That's the GTV potential. This was zero about 4 years or 4.5 years back, right? So this market did not exist. It's at $36 billion. So that's only the AEPS micro ATM market. Then there is the remittance market, which is about a $20 billion market in India. So just these two products is a $56 billion GTV. And then, as I had mentioned, that we are expanding our product suite horizontally. So then at specific, as you keep adding specific products, whether it is micro insurance, whether it is retail liabilities, etc. From a neobank perspective, the market size will keep expanding. So for our current set itself, it's a massively large market. Secondly, just to clarify on the 90% footprint, I think this is the potential footprint of our partners that we already have. But today it is not reflecting in our numbers, right? So as we scale and as we continue to penetrate these storefronts of the partners and more partners start adopting our product and the platform, is when we will hit that 90%. And to give you some numbers in terms of 100% is, it is 662,000 villages. That's the kind of reach potential that we are talking about. So we have to penetrate this 90%. We have potential access, but we still have to penetrate this. We are at about 25,000 villages as we speak.
Wow, that's great. And this is in continuation with the last question where we were expanding credit to these Kirana stores. What would be the average value of the credit given to these, and what of our total loan book amount is given to these people?
So I think the average transaction sizes are anywhere between 5 to 6 lakh rupees, right? It goes all the way down from 50,000 rupees, can go up to 10 lakhs, depending on the size and scale of the entity that we're talking about, right? A significant portion of our lending today is geared towards the partner who's in between us and the final retailer, and some portion of our book is towards the retailer, which is the end retailer, right? So there's a mix, there's a full chain that requires financing, and we are able to provide capital to this entire chain. Like I said, this is a new business for us in terms of the credit proposition that we just started a quarter ago, and in the first sort of quarter for us doing this lending business to the Kirana stores and to our rural tech business, right? We've tried to take it slow because we want to also understand the market as we give out more credit. So it's not a significant book, but we think in the next few quarters this could scale quite materially because our initial pilot experiment has been hugely successful. So the small experiment we did, giving out a few loans, have turned out to be pretty good. And in the lending business, what happens is that the experiment can't be just about giving the money. It's about giving the money and making sure that the first two, 3, 4 payments come back on time with the interest and the principal, all of that. So the experiment is not a short-term experiment that you can do in 15 days, right? It requires 3, 4 months for you to experiment before you can start scaling. I think we are done with the experiment, and now we're going to start scaling and see how that goes.
Wow, that's great. And Rumit answered that we have covered around 25,000 villages. So these 1,66,000 stores are in only 25,000 villages. That is what you mean?
Yes.
So we have a huge, as in out of 6,62,000, only 25,000 is covered.
Yeah. We have a long way to go. We're just talking about the opportunity set that is sitting out there. Since you had asked the question, or I think the previous gentleman had asked the question on the size of the market, I think Rumit was trying to explain what is the scale that is available and what is the runway for our business.
So how do you say that 90% of the rural market is covered?
Yeah. So the partners who have signed up with us and they want to use our platform, they have retail outlets and fronts covering almost 90%.
Okay.
So they will be taking our platform, and therefore we will get access to transactions across this entire footprint.
Wow. So last quarter, what percentage of the rural market was covered approximately?
I think last quarter we were at 130,000 retail outlets, and we've gone to 166,000 this quarter, right?
No.
So that's been the growth.
In terms of your partners?
In terms of partners, I think we've had a couple of really big wins, which unfortunately I cannot take names because we don't have the freedom from them or the approval from them to take their names yet. So I would say I won't be able to give you a number of what percentage of the country was covered, last quarter. But this quarter, because of these couple of wins, we suddenly got access to these very large partners who are giving us this footprint. Now the question is how we scale with them.
Wow. That's for next quarter. All the best from my side. Thank you so much.
Thank you, Hitesh.
Thank you so much, Hitesh. We have a follow-on question from the line of Ankit Gupta. Ankit, please go ahead.
Yeah. Hi. I understand you cannot give us the names of the partners, but just a profile. Who are these partners in the rural areas primarily? These are.
So I can give you a few names. There are some names I can't give, but I can give you a few names.
Yeah, just to understand.
So when you look at a lot of the microfinance companies, you look at Bharat Financial, you look at a couple of players like that, which are, Bharat Financial today is present in over 25,000 locations, right? We are partnering, they are partnering with us, we are partnering with them. They are using our micro ATM solution on their outlets. Think about it from their point of view, right? They are providing, loans to rural individuals. They have a lot of footfalls that come into their stores. By providing our solution and putting our micro ATM devices there, they are able to augment their income and provide an incremental solution to the customers that come in.
Yeah.
So it becomes an incremental proposition for them, and therefore it makes tremendous sense for them to use a solution like this, which is complementary to their business model, but they are able to leverage this incremental product and are able to increase their revenue base, by increasing this product proposition. So that's one example that I would give you where we have a very strong partnership.
Understood. Just last question from my end. Just one thing: if tomorrow, say, these companies develop their own app for the own software or own platform for payment services, isn't it a big risk for our business model?
No, I think it's not as simple as just developing an app, right? There is a complete chain. How does a transaction get transacted? It's not by creating an app is the easiest of the problems, right? But you need to then have the integration with call it MPCI. You need to have the transaction being routed through a banking partner because this is equivalent to an interchange play, right? How the payment gets made out here. So you need to have the entire infrastructure available, or to be able to become a player in the space. So for a new player to sit and think through, which is not their core business, to recreate this entire infrastructure is just suboptimal.
Yeah.
And Ankit, just to add, I think if you look at the economics, it's a scale business, right? So I mean, the kind of efficiency scale that we are able to offer and generate, right? You should be able to generate these transactions at a very, very low cost. Thus, small players who have only a small pie of the broader transaction market, they will never be able to get to these kind of unit economics that we are able to do.
Yeah.
Either from a transaction efficiency perspective, fail rates, and as well as the unit economics of.
Any other player right now doing what we are doing in India?
So I think there are pieces being handled by different people. I don't know if anyone is doing the full stack the way we are doing the full stack, right? But you'll always find competition coming in different pieces.
Mm-hmm. So the payment space, any big names who are doing?
Sorry, you're breaking up. Okay. I'm sorry, you're breaking up.
Yeah, I'm saying on the payment space, any player who is doing the same thing?
So on the payment player, are people providing solutions to retail outlets? Of course, there are multiple people doing that. But like I said, we are not dealing with the retail outlets directly, right? We are dealing with the partners. So I don't know if anyone is doing this at a large scale. One could argue that when you look at the BC program that is run by banks, there are the large technology companies providing solutions, right? So Bank of Baroda uses a TCS platform for powering their BC aggregator BB program, right? Parts of our business is actually competing on that space, but for the smaller banks, right? Parts of our business are dealing with partners, which I don't think anyone is thinking through right now. So it's unique in that sense. As far as the retailer is concerned, there are other players who are providing direct solutions to retail outlets or putting it in their own retail fronts. So no one is. I don't know of anyone who's doing the entire stack. But like I said, there's competition always comes from different pieces. So
I think if you have to look at comparables, Ankit, really from a business design perspective, our comparables really sit with platform infrastructure companies, and most of them are in the private space. So these platform infrastructure companies could be today powering, say, the cards business, the prepaid cards business, where they are sort of just the platform infrastructure players and the front end partners come and consume the platform. So I think most of them really from a business design perspective today sit in the private space and not necessarily people who have the same kind of products because their business is designed.
Understood.
Also, I think the business model in terms of providing the platform and then using transaction-led, payment plus dovetailing credit into the whole equation. I don't know of anyone who's doing the entire stack.
No. Yeah. Thanks a lot. Thanks for time, guys.
Thank you, Ankit. The next question from follow on from the line of Sanjay Kumar. Sanjay, please go ahead.
Hi guys, just a bunch of follow-up questions. So you spoke about Bharat Fin. are we the exclusive partners for them, or is it like anybody can work with them and get access to their customers?
The point is that I don't think anybody signs exclusive arrangements, but what happens is that you can't work with multiple partners either. Right. So once you've got pregnant with one partner, you're using the micro ATM, the device that we provide, for example, can't be used on any other network, right? There's a key injection that happens, which limits the device only to us. So once you bought our devices, then you have to use our network, right? That's just how the nature of the beast is, right? So it is not, if you ask me, do we have an exclusive agreement? I don't think we have exclusive agreements, but do we have them using multiple partners? We don't. So
okay.
I think the nature of the business is that there is inherent exclusivity that comes into the business, whether it's in the agreement or not.
Okay, so there are switching costs as well, you said, right?
So there are switching costs. There are moving away by giving volume to one player. You are able to get better efficiency of cost. Why split the volume into multiple players?
Right. Okay. All right. Next, so BharatFin is on the rural side. Who are our partners for wealth? I mean, any particular insurance companies or mutual funds that we partner with? We can name them.
So no, we don't have we can't name anyone to you on the wealth side. Wealth side is a small part of our business, right? It's again something which is relatively small, and we are trying to scale it up. We have like I said, we've offered our wealth solution a platform to our entire financial intermediary market. So when we said about the 4,000 odd financial intermediaries, 4,300 odd financial intermediaries, we are powering them, offering wealth solution to their customers using our platform, right? So effectively, our business model is to try and be the platform or someone who can actually power up a person who wants to start a wealth business, for example. All the platform, all the products are sitting out there. They're able to transact through us. So you could give a white label solution to a chartered accountant who could then offer wealth solution to his 300, 400, customers, or he could use our brand, Moneyfront, and he could, just log on to our platform, and it's again digital DI or do-it-yourself kind of platform where you could be engaging in the wealth proposition, right?
So this would be like a marketplace, right? So where a user can go and see a variety of insurance products, FDs, and mutual funds.
Yeah, except that you need to go through the whole process of KYC, etc. You can't just log in and just transact, right? You need to go through KYC because there are regulations as you log on to these platforms. But you're right. Effectively, you can get on the platform and you can transact. Absolutely right.
Okay, and again here, the customers are owned by the CAs. So by 4,333, you mean CAs, right?
So yeah, mostly CAs. But I think that the in the wealth business, it's very interesting, right? So there are customers who are owned by the CAs, but the customers come in because they transact directly on our platform, they become our customers directly as well. So effectively, we'll end up owning those customers because we could cross-sell to those customers, but we remain true to our partnership with the CA, right? We don't disintermediate the partners. But you have direct engagement with the customers because the customers want to talk to a person who can discuss wealth with them and solutions. The CA may or may not be the best person to be selling a wealth product, right?
Okay, and so this gives us a lot of opportunities. It may not be just CAs. You could partner with say registered.
That's why we call them intermediaries. We don't call them CAs, right? I did use the word CAs. Since you mentioned CAs, I said yes. A large portion of them are chartered accountants, absolutely. But it could be IFAs. They could be anything, right? They could be just basically intermediaries who are trying to build their own wealth business. We are happy to power them.
Okay, interesting. Okay, and you also said that we don't have someone who gives a complete stack that you provide. Are there any global benchmarks, or if there are no global benchmarks, what would be your North Star? Like, what is your
the global benchmark I would give, and I think Rumit can also maybe add to that. Maybe there's a German bank called Solaris, which again does not own any customers but provides the entire banking stack. Right? I think they're a very interesting play. It's a multi-billion-dollar institution. Rumit, I don't know if you want to add any more names that you think could be similar to our business.
Yeah. So I think from a business design perspective, right? If we keep the product proposition out for a moment, right? Because the product propositions are different. From a business design perspective, I think if you look at the broader fintech industry globally, you are seeing a lot of this API platform infrastructure companies coming through. Solaris Bank is one example. In India, for example, in a different segment, you have Zeta, right, which is largely focused on the prepaid card, right? So they are again a platform infrastructure company powering front ends to do prepaid cards, etc. Or you could look at Setu, which is in a different win in a different category, but again, the whole platform infrastructure kind of play, right? So as a business design, the whole API platform infrastructure play to power front ends, right? I think is where our sort of platform sits from a design perspective. Yes.
Okay. So one last follow-up question. Say if Orkin comes in, Open Credit Enablement Network, Account Aggregator comes in. So we could provide our platform to anybody who wants to act like a bank, who wants to provide credit to their supply chain, say someone, a big FMCG like Dabur, or someone giving credit to their distributors, dealers, so on and so forth. So we could provide our banking services to anybody, like banking as a service. Is that right understanding?
Yeah, absolutely. So what you are talking about is the vision that we are going towards, right? When I mentioned that we want to be the neobank infrastructure provider, right? There are multiple phases that come into play, right? There's payments as a service, there is lending as a service, there is banking as a service, right? All of these have to be in place, right? And we are building that up. We are building this out. So we could provide today, the example that you gave, absolutely we could do, right? The question is, can we do this across the board and across multiple products, and try and be the backbone really for people who want to get into this business? That's really the platform play that we keep talking about.
Okay, great. Thank you. Thanks, guys.
Yeah. Thanks, Sanjay.
Anyone else has a question? You may please raise your hand, please. We have a follow-on from the line of Hitesh. Go ahead, Hitesh.
Tash, how big is our tech team?
We have almost 50% of our staff, right? We have about 250 odd people across our Bombay and our Bhubaneswar centers. Almost 50% of them are dedicated towards technology. So, anything between 115 to 120 people.
And all of them are permanent employees?
Yeah, all of them are permanent employees.
The people who work on the ground, all that, everyone?
Yes, absolutely. The entire 250 people that I mentioned about are permanent employees.
Okay, thanks.
Yeah.
Anyone else that has a question, you may raise your hand. If there are no other questions, I'll hand the call back to Tash. I'll just wait for a moment in case the queue assembles. I think we are at the hour mark, so thank you, friends, for joining the call. Tash, closing comments, please. Yeah.
Yes, thank you, Diwakar. I just want to thank everyone for taking the time to listen to our story. I think we continue to focus on building out our business, and I look forward to talking to you again next quarter. Hopefully, we will have, and we continue to have some good news to keep giving you every quarter. Thank you all. Thank you again.
Thanks, everyone, and have a nice weekend. Yeah.
Thank you.